Welcome to Yellow Tunnel. My name is Dr. Appel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, any questions you might have about your subscription. Look at the trends, where NVDA is going, where the other Magnificent Seven stocks are going, higher, sideways, to the downside. Is the pullback, the current pullback, is it over? Right, market retraced most of the losses. And how to position your portfolio going into the end of Q3. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. My bio, I think the difference between Yellow Tunnel and maybe some of the other services that are there is that we have a team of financial. First of all, my background is technology. I have a master's degree in computer science, and I worked as a CTO of several companies that went public in fintech space here in Chicago, and a lot of broker-dealer companies that I worked for. So that's my experience. And then after companies went public, I built a team of financial engineers that can help me generate signals and manage my own money. So that's the unique proposition, is that we have a team of very strong financial engineers with a lot of background in economics, physics, and math. And they're building models using latest neural networks. And then I use these models on a daily basis to trade. And you can see the results in live trading room. Disclosures are very important. Please read them. I'm going to go through specific trade ideas. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we jump into trading psychology, not a lot of people like to talk about trading psychology, but almost everybody likes to talk about NVDA, right? So, okay, let's talk about spiders first. This is general market. So basically retraced all of the losses in August, right? And within reaching distance, maybe 2%, right? Within 2% of all-time highs. So very strong rebound in a very short period of time, fueled by, I would say, better than economic news, right? We had what did we have last week? Let's come, right? We had PPI data that came in better than expected. So inflation data came in better than expected, right? Supporting the narrative that Fed can lower the interest rates, right? And then we had initial jobless claims that came in better than expected on Thursday. So that supported the narrative that the economy is still resilient and strong and people are employed. And then retail sales came in better than expected. So those, I would say, are the main trigger for the rally, right? Plus, it looks like Middle East, at least as of right now, it could always kind of come back into the headline news, but at least geopolitical risks are also subsided significantly. And the carry trade, the Japanese yen to US dollars also has been stable, right? You don't see any more dislocations like we had on Monday. So as a result of that, since the fear of recession subsided, showing that the economy is still resilient, people are still shopping, and inflation data is pulling back, then that supports the narrative of soft landing and that the Fed will lower interest rates in September. And then you have, so the main event, I think, of this week will be, where did it go? Sorry, Fed Chair Powell's speech at Jackson Hole retreat. Usually that also sparks some kind of volatility. And then we have, right after that, the following week, we have NVDA earnings. So this setup, I think, right, it could look very similar to last year. Last year, it's almost the same setup. The velocity and the magnitude of move has been a lot slower last August. Right now I'm looking at August. You can remove some of this lines, so probably don't need them. Okay. But similar thing, right? The market reached the top end of July after the earnings, then pulled back in August, then recovered. Again, most of the losses came think what 452, 460 came within 2%, right? End of August came within 2% of all-time high, and then in September, when everybody came back from vacation, kind of had another leg down, right? Obviously, history doesn't have to repeat itself. Last year is different from this year, but you know, it is a possibility, right? And you know, a lot of people calling, or you know, from technical point of view, I think that's the core scenario, that we have another leg down. From macroeconomic point of view, I think nothing really has changed. Same concerns that caused the market to pull back on August 1st are still there. And the main concern is that Fed is behind the ball, right? That just like on the way up, when they were supposed to raise interest rates, they came in late to the game, right? That they're gonna come late to the game on lowering interest rates, and we will have these dislocations like we saw in September. Timing them might be a difficult task, but it is on the table. It is on the table. You can see 10-year yield broke to 3.80, right? That's the major support that basically span all the way from beginning of the year. So we broke year-to-date interest rates, even though the Fed didn't even commit to any interest rate cuts yet. But the interest rates already kind of predict 100 basis points drop, you know, either this year or you know soon after. So anytime interest rates drops below 380, one of the explanation is that it's a fear of recession trade. And the 10-year yield has not dropped. It has dropped 3.80 and still kind of very weak price pattern, right? Below 200, below 50-day moving average, very weak price pattern. It could be interpreted as soft landing, that Fed will start lowering interest rate, or based on the macroeconomic data, it could be interpreted that the hard landing narrative is taking over the soft landing narrative. Obviously, VIX jumping to 64 and back to 14 is also very unusual, right? We haven't seen moves like that since the pandemic, right? And they could follow with the second leg up, you know, just like last year, right? It jumped in August, right? Didn't jump as much, right? We barely got to 20. It was a more steadily decline, but then we did have at least second leg up in September, right? I mean, it did get, you know, as high as 24, 23. So much slow grinding process than now, but we did have, you know, at least another leg up in the volatility. In terms of positive news, I think the high yield actually making new highs, right? Usually demand for junk bonds subsides when you have dislocations. So liquidity-wise, I think the situation has improved significantly. We hit 200-day moving average on Monday, and then right away, you know, it actually is making new highs. So that's positive. Value stocks are at all-time highs, right? The triple top. So that's also very positive, that there is a broadening of the market rally, and we did see that more and more stocks, I mean, right at 200-day moving average, but recovering most of the losses in terms of how many stocks are participating in the rally. And then small caps, I think, are above 50-day moving average and above the breakout, right? The breakout that happened in July in small caps. So there is enough narrative to support soft landing. There is enough narrative to support hard landing. You know, NVDA earnings, I would say, is the next catalyst, and Jackson Hole meeting, right? So in 10 days, I'm going to have both, right? And expectations for NVIDIA are very high. There's some companies that they had strong earnings and, you know, the stock was rewarded, but some were not. Like AMAT is still weak, not going anywhere. Pelletier is actually very strong, you know, making all new time highs. Dell kind of not going anywhere, right? So for every positive story, there is a negative story. So we'll see if NVIDIA can deliver earnings, you know, beyond what people expect, right? The bar is raised very high for NVIDIA. So on that note, how do we position going into this, you know, going into September, October, which usually from seasonality point of view is you know, very volatile time of the year. So one scenario, we're going to take out the all-time highs, right? And it's a very strong scenario, right? All it takes for Powell to acknowledge that they are kind of late to the game, and maybe start talking about that 50 basis points are on the table in September, right? If he says something along those lines, market will continue to rally. There will be a strong rally because everybody anticipates that. And this is why this is a strong rebound, because it supports the narrative that Fed is probably late to the game. It should start raising aggressively. And, or maybe he can say 25 in September and then 50 in November or something along those lines. So that's scenario number one. Scenario number two, geopolitical risks in Middle East, maybe another, carry trade. The carry trade, people were buying, basically borrowing money from Japan at zero interest rates and buying a lot of asset classes. This trade took place for decades. So one dislocation is probably unrealistic to expect, right? A lot of people are concerned about Lehman moment, right? That the companies that have large exposure to the carry trade, banks, maybe hedge funds, that could also cause some kind of a Lehman moment in September, October. Maybe not as, obviously not as severe as 2008 crisis, because banks are a lot better, capitalized, but nonetheless could create another leg down, right? So that's scenario two, where we're basically revisiting the lows. I would agree it's a pretty wide range, but we either trade in this range and volatility VIX gets back to 20 to 25, or I guess we could grind lower, right? I mean, I guess another 2A scenario, we just kind of grind like this. I would not consider that. I would just consider that, we are retesting the lows. Maybe here, maybe it's here, but somewhere we're retesting the lows. But we hold the lows, right? And scenario three, more evident, maybe in September, we have unemployment data that are already ticking up again, right? From 4.1, we went to 4.3. And next time we're going to go to 4.6, right? If September unemployment data is 4.6 and Fed does not commit to interest rates, kind of changes, keeps the same rhetoric, doesn't say that they're committed to September, well, then you could have scenario number three, right? Kind of this, that the hard landing narrative is going to take, precedence. So those are, I think, the three outcomes a trader or an investor should position themselves, right? Obviously, if scenario number one, I would propose to have more bullish positions than bearish. Still hedge your portfolio in case you're wrong, but I would have more bullish position than bearish. If you say scenario two, probably market neutral, right? You can do cover calls, you can do mirrored puts, you can do debit spreads, butterflies. If you don't trade options, maybe you have two bullish positions, two bearish positions. Treasury, if market is in recessionary trade, then one of the most popular trade right now are bonds, right? People buying 2-year yield bonds, people buying 10-year yield bonds, because the bonds is a good proxy for fighting the inflation or withstanding the recession. Gold broke out, right, on Friday. So gold is breaking out, right? That's a sign of, well, either recession or inflation. Why is gold all of a sudden breaking out when everybody is happy, right? So gold is breaking out. That's another negative sign for the bulls. But something where you can hide. You can say, hey, Vlad, gold is breaking out all-time highs. If there's going to be a recession or resurgence of inflation, which is less likely scenario, then you can hide in gold, right? Healthcare has been very strong. Healthcare is breaking out. Again, people are, what does it mean when gold rallies and breaking out to all-time highs and NVDA, lagging behind? That means that a lot of institutional traders are trying to withstand this volatility, right? You can hide in healthcare, you can hide in consumer staples breaking out, right? And then utilities, right? Those are the usually stocks that pay you high dividend, right? They pay you high dividend, and they are less, the revenue is less exposed to macroeconomic headwinds. And that's the trade that we're seeing right now, right? Utilities up, so safety asset classes are going up, treasury TLT is going up, gold is breaking out. So all of these are signs that people are concerned, and one should be defensive. If you want to build rebalance portfolio, then these are the stocks that you can, at least half of these stocks. You can still buy NVDA and say, Vlad, nobody knows anything, right? My friends always say, Vlad, nobody knows anything. I agree with that. But you know, there are scenarios that have high probability, right? What everybody does know, there's a high probability scenarios and low probability scenarios, right? Right now, NVIDIA kind of breaking out and continue going higher in bullish momentum is possible, but I would personally not chase this trade, right? I think it's low probability event based on some of these observations, right? So as a trader, you need to be prepared for both core scenario and then look at the worst case scenario, right? So as a trader, that is our job, right? To look at support, resistance level and see, okay, this is the core scenario. I think we're just going to trade sideways because there's a lot of headwind. But I understand that the market can make new all-time highs, and I also understand that the market could, retrace all of the gains for this year. Both scenarios are on the table, and unless you know what Powell exactly going to say in Jackson Hole, or you know exactly what NVIDIA is going to deliver, you just don't know. Any questions? Lalit, Luis. All right, we have a lot of people. Henry, Lalit, Linda, Luis, Mark, Peter, welcome, Scott, Venkat, Vita, Werner. Welcome, guys. Thank you. Appreciate you guys attending on Sunday. It means a lot to me. All right, so scenario one, we're making all-time highs. Type in. Let's just spend some time preparing for, August is almost behind us. On Monday, I'm going to drive my girls to U of I, right? So back to school. So summer is almost behind us, right? A couple of weeks left, and then everybody's going to come back from vacation, and then the volume is going to pick up, and people are going to start voting with their, balances. So how many of you think, one, we're going to break to all-time highs, and NVIDIA is going to deliver, and Powell is going to deliver, and we are heading above all-time highs? How many of you say no? Everything, all the good news already factored in. There's really no good news until the elections, and we're just gonna have this volatile couple months, similar to last year. Scenario number two, and scenario number three, we're heading back to, recessionary theme is the dominant theme, and we're just gonna make new lows this year. All right, Lalit, thank you. Henry, Linda, Louis, May, Mark, Peter, Scott, Venkat, Michael, Steve, Werner, Vito, Fred, Jeff. What do you guys think? Scenario number one, all-time high. Scenario number two, sideways. Scenario number three. Henry, one, making all-time highs. Thank you. Anyone else? All right, so I'm gonna go with Lalit. We've been trading together for quite some time. I'm gonna put down scenario number two. I think this is elevator down, elevator up, very fast, very quick. That means that, basically from physics point of view, right, from mathematics point of view, usually, I mean, you could have something like this. I'm not saying that this is improbable, but I think this is a low probability. And of course, scenario that we do this, right, going to elections, right, going to elections. After elections, November, December is very strong, especially after elections. I think we will probably close at these levels, right? A little bit higher, a little bit lower, but 560, 580, 540, all of these scenarios are possible end of the year. All right. So how do you trade in these conditions? If you have bullish positions, stock position in dynamic power trader, right? So we have 5 services, paid services, 5. We have 2 models, right? Main model, short-term, aggressive. If you're aggressive short-term trader, right, you like to trade every week, right? Then, or at least a few times a month. Then aggressive power trader, right? Aggressive power trader, there's signals every single day. So people who like to trade short-term trading aggressively every day, then aggressive power trader, and we get signals every day, right? So on Friday, let me see, we had Cisco BSX, right? Cisco BSX model picked up Cisco, actually traded Cisco earnings, right? They deliver on the earnings. Expectations were very low. The stock sold off significantly, and it closed exactly at 50, right? Closed exactly at 50. I was trading actually the stock. And this is an example where you could have these asymmetrical returns, right? Everybody always say, well, I want to invest, 5 cents, right? I want to buy for 25 cents, Debit spread or butterfly, I want to finance it with a credit put spread, right? Risk reversal, very popular. Sell puts, take the premium and buy a call, especially if you want to own Cisco at 41 or sorry, 39, right? If you want to own Cisco at 39 or 41, which a lot of require a larger portfolio. So this is for people who have larger portfolio, right? Then, you know, if you want to own it at 2022 lows, then you think, listen, Cisco is a proxy for economy, for S&P 500, technology budget, CapEx budget. Then, then this is a really good trade, right? Because if you want to own the Cisco at 40 when it was trading at 46, then this is the way to go, right? Obviously, you have to have a larger portfolio because if you get assigned 100 shares of Cisco at 30, I think, sorry, I sold 41 put. I sold 41 put. So if you want to own the Cisco at 41, you have to have $4,100. $4,100. I mean, if average account is 10,000, that means you have to have half of your money in Cisco. For $10,000 account, I would say that's inappropriate, right? You see these risk reversals on the news, and everybody sell put, buy stock. As long as you don't, as long as you want to own the 100 shares of Cisco, but you really need to understand, positioning and exposure, right? You don't want to be half of your portfolio be sitting in 100 shares of Cisco, because if they had bad earnings, well, it could go to 36, right, and continue to fall. So you just, you have to be careful. I mean, you can always take a loss, obviously. It just closed the short put, but that was the trade, right? I bought 25 cents. Call spread, sold it for 16, and it happened to be that we selected $50 strike as your middle strike, right? So right now, a lot of people, what they're trying to do, they want to try to, because market volatility picked up and market moves, and especially if you also have earnings, you want to build a strategy where you can risk little, right? Risk 20 cents, risk 80 cents, but you can make, in this example, I risked, I put on the trade for 9 cents and I closed for $1, right? So I invested 10 cents to make $1, right? So that's, the 10-fold return. It's unusual, right? We tried because I did the same thing and, AMET, right? Because I thought AMET will behave similar to Cisco, but, that didn't work out, right? Cisco moved, but not enough. Cisco moved, but AMET, same setup, but it didn't move as much. Right, almost flat. So, so that's but that is one way to find these asymmetrical returns, right? And this is covered by Nassim Taleb, right? If you read Nassim, does it shows up as him? No. So the set of possible results of investment strategy where the upside potential is greater than the downside rate. Derivative contracts called options are the most common instrument of asymmetrical returns. Or another common is these futures, right? People trade futures, VIX futures, S&P futures, because they're looking for this one-time event where VIX goes from 16 to 65. Obviously, if you had VIX futures, then, or S&P futures, you made a lot of money on that day, right? If you were long the volatility. If you had options, I don't know, because most of the volatility by the end of the day, almost got back to Friday's level, right? In one day, it basically reversed everything. Sorry, here, close it in 39. But, those are the examples of asymmetrical returns. And the good new book is Black Swan Events, right? He talks about this in Black Swan Event. Right, so here's a bunch of this book. He's ex-quant, And during financial crisis, right, this is how a lot of people made money, right? They bought these out of the money puts, right? And you could see it actually now. If you look at the positioning, it's the same trade, right? People go in and start buying these 480 puts, 450 puts on S&P because they think, this VIX is going to just, there'll be a resurgence of the VIX and of the volatility in September, October. So if you look at the dealer exposure and spiders, right, in terms of positioning, not that the August expiration is behind us, right? The next positioning is September and October. So October, not a lot of position, but next level in September is 540. We have 25,000. I mean, it's not a lot, but this is where we start position support 540, 530, and then 520. But there's quite a few people buying 400 puts, right? There's quite a few people buying at 430 puts, basically saying that between now and third Friday of September, market is going to be at 430. This is not one person or two people, right? This is 30,000. Then this is just as much positioning as we have in 540, right? Why are they buying these way out of the money options puts? Well, because they think we're going to have a black swan event. Right? I mean, you can find out, what are the odds of black swan events? They're very small, but that's where you get these asymmetrical returns, right? You invest 10 cents, right? You buy a trade for you put on the trade for 9 cents, and you can, you can sell it for $1, right? So that's if you look for low probability trades but high return on capital, right? The idea of black swan events, this is asymmetrical returns, but they have low probability. It doesn't say that here, but these are very low probability trades, right? Most common is options trade, buying calls, and we know that 90% of these out of the money calls expire worthless, right, statistically. So you're basically making small investment with the idea of asymmetrical return. And that's what options trading is all about, right? It's all about these odds. Or you can, sell, put spread on Cisco, right, which is a very high probability of success trade, but return on capital is small, right? If I just do this, well, the most I can make is 15 cents, right? But I'm risking, if it drops to 39, I'm risking $2, right? So 15 cents credit versus maximum loss $1.85. It's the other way. It's asymmetrical, asymmetrical loss, right? It's a high probability of success trade, but if Cisco had really bad earnings, we could be at 39. Any questions? I feel like we are being set up for a bear trap. It does feel like that. It does feel like that. A lot of technicians, a lot of economists basically say when VIX goes to 64 and you have these large dislocations, we're talking about large economies, right? People were indiscriminately selling Bitcoin, right? When it first happened, Bitcoin got to 48,000, right? And you could see Bitcoin has been very weak, right? It's a pattern of lower highs. It's not even above 50-day moving average. Usually Bitcoin is leading the market. And because Bitcoin is very weak, this is another argument that we're still not out of the woods, and it does feel like a bear trap. It could be a repeat of last year, summer, it totally can, but it doesn't have to be, right? I think the most important for traders, sometimes we kind of condition ourselves to only consider one outcome. But the idea is that it's a set of possible outcomes. It's a set of possible returns, right? Trade is about, well, scenario 1, 2, and 3, and which scenario is your core scenario, and which scenario do you want to trade, right? So you have to pick a side, right? You have to pick a side that has the highest, that has, core scenario, right? Okay, so that's aggressive power trader, right? So you see BSX, Cisco trade, on Friday, Cisco triggered signal that is going higher. BSX had been triggered many times in the past couple of months, and you can see it's also at all-time highs. So that's aggressive power trader. Weekly, and we give you support and resistance level, right? We give you buy signal, sell signal, and we give you trend, long-term trends to help you decide where do you want to buy or sell. You can always go to an AI analysis, type in Microsoft, and it will tell you what do we think about Microsoft, right? Again, support, resistance, and long-term trends. Is Microsoft still going to head higher? For now, model basically says Microsoft long-term trend is still intact, right? It got beat up. It's still trading extremely weak, below 50-day moving average. But 6 months from now, it could be a $470 stock, right? So that's the idea of these long-term trends. And our models that you can analyze any stocks. And again, some of these stocks I trade, not all of them. I don't trade all signals, but the one I do, you can enter your phone into the SMS setting. You can see history of all of our signals, right? You can backtest them if you want to. And then you have recordings, right, of live trading room. So you have that in all of our services. Weekly trader is similar, different models, but it's a longer term signal. Longer term signals, this week it was AEP, right? So again, your insurance company, your utility companies, your Costas of the world, very defensive, right? Going into very defensive portfolio. In dynamic power trader, in terms of hedging, you can actually see all of my hedges, right? So now I have 2 hedges. I have small caps. I think small caps. I don't think we're going to break 210 to 15 calls per 210 to 15 level on small caps, right? If we trade sideways or to the downside, we're not going to get to break through the 215 level, right? 62%. Small caps have been underperforming, but they're above 50-day moving average. So that's dynamic power trader. I trade stock and options. We talked about earnings power trader, Cisco, AMAT. Almost every week there is earnings strategy. I try to do both, where I collect the premium, or sometimes I'm looking for these asymmetrical returns where I can put on a trade for 10 cents and close it for $1. And then profit accelerator, right? Profit accelerator. This is more of a stock portfolio because most people don't like to trade options. They're complicated. You have to be right on the time, you have to be right on direction, you have to be right on magnitude. Stocks is easier. As long as you're correct in direction and time is not important to you, then it's easier to trade. All right, any other questions? So those are the 4 or 5 different services. I encourage you to sign up. You can click on dashboard. I encourage you to log into your account, create a free account. You get every Sunday, if you look at the dashboard, every Sunday, we send a blog. So you're gonna get a blog today. So please add info@yellowtunnel.com so you get our blog. Webinar, we have these webinars that you participate in. We have one-on-one support where you can talk about to our product specialists that can explain you what we have. We have a guide, and then we explain every service, right? You can go through these services, aggressive power trader, weekly power trader, and see what you're getting, and watch the video of me explaining. What else? Psychology, right? We do have a lot of psychology content. You can see that, I read a lot of books on psychology. We have a lot of content on psychology, so I encourage you to visit them, right? We talked about process versus outcome in these blogs and videos on the website. I encourage you to look at them. Under trading concepts, under market plan, there are videos and blogs that talks about different topics like spreads, probability of success, importance of risk management, and other important topics. Okay, any questions? I think I covered most of the content I wanted to cover. All right, if there are no other questions, you guys were great. I think from my perspective, core scenario is to be cautiously optimistic, continue to keep your hedges, Fell into the rallies, right? We had unprecedented rally. I got caught by surprise. I didn't think we were going to get that far, that quickly at least. So, but I think volatility is here to stay, right? Assuming that, you know, we're not going to have that this is the end of it, probably. I mean, it could happen, but I think it's, again, low probability event. I think more likely scenario is, again, these violent, volatile moves in the next few months. All right, thank you very much and have a great day.